Hey, 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 how you doing? How you doing, guys? Hello, Salman. Hello, Deuce. How are you? How are you guys? Hey, Alex. I have a few ones very good for you, Alex. Let's see if you have my eyes now. Hey, Bob. How you doing? Hey, Luke. What's up? Michael. Hello, Sven. Hope you are doing good. Uh, I'm gonna give one more minute, and then we're gonna start. I have a lot of things to tell you today. Well, not to tell you. I mean to show you because I actually saw a lot of good opportunities. Hello, Eileen. Hey, Diane. So today I watched a lot of good opportunities, and something I was telling you guys on on my reminder on Discord was about adaptability and flexibility. So now we have been in this market behavior for some days, like it's taking its time for showing the real moves. It's taking a bit longer for develop the real price movement. So by this time we should be able to actually adapt our approach and be flexible with our edge or with our playbook. So that's just something that I wanted to share with you. Let's see if we saw the same thing. So let's go to the charts. Hey, Rael, how you doing? All right. So let me take this out. All right. Okay. So Apple today, guys. Apple was revisiting this here. Apple was revisiting this gap from Friday the 9th to yeah to Monday the 12th. So this is what is left from this gap on the daily chart. We revisited this gap a few days ago on Monday, and we have been just going down and down on this gap. So probably it's gonna be filled by I mean not sure if by this week, but I think this is gonna be filled. So we revisited this gap here in the morning. Where's the person? Wow, something happened. Yeah, something happened. Something happened on Apple. Morgan Stanley cut Apple's price target from 275 to 252 due to series of debt delays. I'm not sure if that's from like a minute ago. Yeah, 2 hours ago. Well, that I don't know what happened. Well, but anyways, so we revisited this gap this morning, and then we bounced from there. So the both indices were pushing higher. That's super nice because it everything started like on the very first candle. So we were kind of making lower highs, lower lows on the pre-market, but right at the open, we actually had nice reaction on both indices. So it's just people buying the dip right here. So okay, so Apple made this dip here and then slowly grinding higher and higher and higher. So it reclaimed the pre-market low, it reclaimed this previous day low, and then it reclaimed this 5 minute opening range that it's actually almost in line with this opening price. So I like this one here. So it's this is a few things, right? Like okay, so this is a and this is an order block here. This is an order block here. This is the opening price. This is the 5 minute opening range. So I really like this move here. And also, what was happening on the indices? Well, they were breaking out to the upside. So I really like this move here. Well, actually, this is the actual move. But this candle 1001, it was a weird candle in both indices and most of the tech names. So we had this retest of this order block, reclaim, opening price, reclaim, 5 minute opening range high. So on this retest here, this is the actual retest on the breakout for both indices. And also this 205.37 to 205.37 has been a key level on the 15-minute chart for some days. It was this consolidation here from Friday, May the 2nd. So I was ready with that key level here. So here if we open a position here, your risk is this opening price. Your risk is this opening price. And if you were aiming to high of the day, this was a 1 to 3.2 risk reward ratio trade. But the actual target here was the pre-market high. So this was the actual target here. And as you can see, SPY was actually struggling with that 590.80 pre-market high key level, but QQQ was actually just ranging on that the top of the day at that moment. So this relative strength on Apple was very noticeable here. So this 1007 candle, something happened. I mean, it's all about news, right? I don't know what happened here, 1007, but this very impulsive candle after reclaiming 5 minute opening range, after reclaiming opening price, after reclaiming this 205.37 key level on the 15-minute chart, we have this impulsive candle here. So if you again, if you were aiming to high of the day, this was a 1 to 3 risk reward ratio trade. Nice one, right? This was very nice. But the actual target will be this pre-market high. So that will be my main target for this. And this was a 1 to 5.35 risk reward ratio trade. Hey Neto, I didn't take this one because the SPY was not really clear, and I just missed this opportunity. So what will be a nice opportunity here? Well, here we created this order block here. This is the uptrend, and this is. Did you see Tony's video of this week about the 10 rules? I really like it. And just for you to know, I'm sure you already understood, but just for you to know, the one candle rule is just an order block, right? It's just an order block. So in an uptrend, the one candle down closing; in a downtrend, the one candle up closing. So it's just an order block, right? So if you have the redirection of the price or some sort of consolidation as we are having here, that's showing you a strong order block here. So if you have this second chance here, I mean, you could do two different things. So here this is the revisiting of the previous high of the day. So if you have something like this, that was a nice entry. So this is the order block on high of the day. This was a nice reaction here, and maybe you had your risk like here, and you were aiming again to, well, let's say the pre-market high. It was a 1 to 4 risk reward ratio trade. So that this is very good. And we did have another opportunity here. So let me show you here. So it's actually very much this same thing, right? So if you miss this and you say like, okay, well, here SPY was actually reacting on key levels. So here it's reacting on key levels, and QQQ was above pre-market high, holding this consolidation. So if you take this is the candle where QQQ is it's breaking out of that range. And also SPY was bouncing from the 5 minute opening range and reclaiming this previous day low. So this was a third opportunity here on Apple. So again, if you were aiming to pre-market high, that was a 1 to 4.2 risk reward ratio trade. Or if you were aiming to high of the day, this was a 1 to 6 risk reward ratio trade. So whatever you took here, they were really good opportunities. So let me go to the chat. Bob, Apple Twing. Don't trust Apple. I just told you several times. Uh, Eileen, can you take a look to Google? Yes, I will. Okay. Alex, great video. Yeah, the one for the 10 rules, right? Yeah, it's really nice. It's really nice. I actually took a lot of notes. I'm refining my playbook with some of the comments. I mean, it's pretty much is the same thing, but I'm just adding a lot of notes to my playbook. I'm gonna share with you in a few days. Uh, Neto, how would you avoid entry on Apple 955? 955, 955. Here. What's going on the indices? Indices are bouncing. Ah, well, I just miss it. Yeah, I just miss it. But that's actually a nice catch. Yeah, this entry here, it should be probably like here, right? Well, but the thing is that if you enter here, if you enter here, you were stop out here. So, well, I don't know why I missed this, but yes, this is a break and retest of the 5 minute opening range and also the opening price. But yeah, I mean, you will be stopped right here. Or where will you set your risk here, Ale? Like maybe at the bottom of this one of the candle that actually broke the 5 minute opening range. What would you do here? How would you avoid entering Apple 955? Yeah, I, for being honest, I mean, I wouldn't do it. I mean, this is a nice break and retest. High of the day, 5 minute opening range, opening price. This is a nice entry. My entry will be here on this 205.37. It's the top of the body of this retesting candle. And my risk will be, let's say, the opening price. So if you were aiming to a 122, oh, look at this. If you were aiming here to a 122 risk reward ratio trade, this is touching it with the nose, like just just like that, just like that. So, but anyways, you should be stopped right here, right on this candle, and also this is kind of a very small trade. In my opinion, yeah, this need to be like something like this or 206 maybe. Yeah, but I see what you saw here. I mean, this is a nice break and retest of here. And in the indices, they were actually bouncing from that order block. So yeah, I think this is nice, Ale. With a few things. It actually hit the 1 to 2 reward. Yes, but three candles later, you will be stopped here. But if you were actively watching here, you will re-enter. Yeah, you will re-enter like here, right? Yeah, like three candles later, you will re-enter because uh, this is actually respect. The setup is intact. Uh, higher lows and then higher highs. So yeah, I mean, how would you avoid to enter here? Well, you wouldn't. That was a nice entry. Uh, yeah, Spy and QQQ were also on the move up. Yeah, that, that's true. So these are all the moves that I watch on Apple here. Not sure if you see something else, let me know here in the chat. If you don't, let's go to the next one. AMD. So AMD had a few different good opportunities. Let me show you here. So AMD had this break of high of the day, break of high of the day, break and retest of high of the day, order block here on high of the day, 5 minute opening range, above pre-market high. So this was a good chance to enter here. So where where would you say that this was a good entry here? Maybe there, risk at the bottom of this candle, and you will be looking for 1 to 2 risk reward. That's 115.22. You actually have several opportunities here to enter on this trade, and you were stopped like here if you were in this trade. Later on the day, it's almost the same thing, right? Almost the same thing. It's the break and retest of this 5 minute opening range high. the this order block created on the first high of the day. So we had this break, this placement and retest here, or this pre-market high here. And what was happening with the indices here? Well, let me see here. So here on this first entry, can you see indices were breaking out? That's a nice entry here. That's a nice entry here. Impulsive candle here, 951. And yeah, probably, I mean, if you took this trade here, well, that's the thing. I mean, if you were waiting for the body of the previous candle, that's very close to high of the day. But if you were just like waiting to hear 114.90 or 115 here, yeah, well, 115 is too much. This was a nice entry here. It's just, I don't know, this was a super impulsive candle, but this one here, it's a break and retest of the pre-market high. Indices were breaking the range for the day, range for the day, range for the day. So indices were breaking the range of the day, and it had good reaction right at the pre-market high, broke this 5 minute opening range high. So if you open your position here and you were aiming to high of the day and your risk was at the bottom of this order block and the bottom of this candle, you got this 1 to 3 risk reward ratio trade. But this went all the way up to here. At least this will be my next target, 115.50. That's the bottom of this gap on the daily chart. But do you see the price action here? It was non-stop all the way to the to this gap. So probably you made your first stream here, right? Like if you are bar by bar here. For those that don't know what a bar by bar is when you are holding runners and you want to go bar by bar, you are closing your position when the next candle closes below of the previous one. So for example, here this 1112, I mean, yes, it closed to the downside, but it's inside of this huge candle. So if you are doing a bar by bar thing, you will be maybe close your position here because this actually closed below this. But if you were waiting actually for a close below this impulsive candle here, you close it like here on this 1116. So that's kind of the bar by bar. So this is a nice way to hold for runners here. Okay, let me take a look to the chat. Alex, that was my trade. Which one? Uh, the first one or the second one? I think it's a loss. Yeah, Alex took a loss. Robert took AMD call at 9:51. 9:51. Yeah, that's the candle we were talking about. Um, Moving up, tight stop loss on 114.72. 114. Yeah, the bottom of this previous candle. Alex, I stay green, but it was an exhausting trade. Basically, the same trade that Nvidia. Yeah, I'm gonna show you my two trades on Nvidia because I had a loss on Nvidia and then I had a huge win on Nvidia. I'm gonna show you in a minute. Um, okay, Rael, market dumping now. I don't know. I don't know what happened. Did you see what happened to Apple? Something was happening. Hey, Chris. All right, so that was AMD. Let's go to the next one. This is the next one. It's Amazon. So Amazon was inside of this here. This is a gap on the daily chart. This is from the tariff news. Yeah, the weekend of the tariff news. So something is happening on the market. Yeah, something is happening on the market. I don't know what, but okay, well, we will figure out in a minute. Okay, so here we were ranging, here we were inside of a range, here just chilling. We had this break and retest of this area of, well, let me show you also this one. So this white box, let me open the daily chart. This one box has been a struggling area for Amazon. So it was resistance, then it was support, resistance, support, and right now it's support for this move. All right, so that's that's what it is. This white box. So when we had this break and retest of this white box, that also it's the edge of this daily gap, and also, well, that's it. The edge of this gap and the edge of this key area. We had this break and retest, and what was happening on the indices? They were recovering. They were having these nice candles here, coming from the bottom of the range, but here it's it was actually having spy again to the range. So if you were looking to this, you could have two different things. So if you enter like here, you have two different options. All right. So you have your risk like here, like at the bottom of this, and you probably were stop out here. I know this is tight stop loss, but if and what was happening here? Uh, SPY bouncing on this 1 minute opening range, and QQQ was just bouncing there, bouncing there. So yeah, well, I mean, this could be a nice entry here, but if you manage to stay, or if you stayed on the until the next move here on the pre-market low, maybe, yeah, the pre-market low, your risk was the bottom of these candles, and you were looking for this high of the day was almost a 1 to 2 risk reward ratio trade, and it actually went all the way up. So maybe if you actually enter like here on these candles here, you didn't have your aim here. You were aiming actually to the next key level. You had maybe your risk was a little bit wider, like to the bodies of this one. Yeah, if your risk was at the body of this candle, that was the one that broke the level, you actually managed to stay here, and then you made all the move here. Anyone took Amazon today? Alex, I wasted a lot of time trying to find an entry to fill that gap on Amazon. Yeah, so you were trying to, yeah. Well, here, Alex, this was a nice entry here. Huh? This was a nice entry here. So if you got this retest of the pre-market low and you see this price action here, I know it's not aligned with the indices, but look at this candle here. And Amazon was looking very weak at the opening, so the relative weakness from Amazon with the indices, this is a very good price action here. So if you took your trade like here or here, maybe, yeah, I like, I mean, I like here, right? I like here, it's the beginning of the gap, and also after this retest of the pre-market low, it was 952, very good time for this trade. And you were aiming at least to this 5 minute opening range. This was a 1 to 3 risk reward ratio trade. But I was actually not looking at Amazon because it was going down and the indices were going up. So my playbook. I like to take a trade on the same direction than the indices. I don't like to fight the trend. So I just missed this. Uh, but I mean, if you were looking for something to the downside, this actually offered a very good and nice uh, retest here on pre-market low, and it actually went good to the downside here. All right. So the next one was this one. Well, I would like to debate how to set a proper stop loss here. So this is the things that you need. This is the things that where you need to know your ticker, right? So this entry here, it's 201.46, and so 20 cents or 15 cents on the underlying for Amazon. It's too tight of a stop loss, even when visually here can look decent. This is just too tight for Amazon. As you can see, the candles on Amazon are usually a little bigger than this. So uh, that comes from experience on trading Amazon. I mean, you need to know how your name is moving here. But just imagine that you were stopped here and the reclaim on these candles here. Maybe you decided to take an 84% rule, and this was a nice move. And this is exactly that I was telling you a few minutes ago about the market has been giving us a lot of similar days with fake moves and moves later in the day. So if you already adapted to this kind of price action, later moves, and respecting key levels, probably you took this one here. So anyone took Amazon today? Ale, I wanted break and retest of 200. Yeah. You know what? I mean, everything too close to 200, I will be like very cautious here because it was on the news a few days or weeks ago that Jeff Bezos is gonna sell some billions on shares. The last time we took weeks to break the 200 level because he had and a lot of orders on that level. So I will be like very cautious on the 200 level. Right now it's respecting. Well, right now it's respecting, but look at this. Right now it's at 245. So if the I don't know what happened, eh? I don't know what happened. Look at the indices. Oh my god. Something happened. I don't know what, but something happened. Let's find out later. So just make sure that you are aware of the volatility around the 200. All right. Um, Naman, did you take a trade today? I took two trades. I'm gonna show you. I think it's the next one. Entire high today just got wiped. Yeah. All right. So okay. So let's go to Nvidia. This is the trade. This is the first trade I took. So in my entry, I'm gonna show you this. All right. So I had this break and retest of high of the day, order block, right, and previous day close. Right here, you see this is a very red and bearish candle, but I want to show you what I was looking at. Uh, all right. This is the 30 seconds. Yeah. So I just want to explain what I was watching here. So this is the 30 seconds chart. And the reason I took this trade, it was this break and retest of the previous high of the day, order block, previous day close. So there were a lot of coincidence here. And what was happening on the indices here, it's on that circle. The indices were pushing up uh, on that order block. But look at the next candle here. Again, I repeat, this is the 30 seconds 30 seconds chart. I'm sorry. So this is the 30 second chart, but I just wanted to show you what I was watching when I entered this position. So what I was watching was this candle here. I entered at the top of the body of the previous candle. So this is my entry point, and I was aiming to 135, I think, something like this. Yeah, 135, and my risk was probably something like this. So this was a 1 to 4 risk reward ratio trade. This was a 1 to 4 risk reward ratio trade, but but it failed. It failed miserably. It failed miserably, and I was stopped right here. I was stopped on this candle here, 10:07. Yeah, my risk was like here, something like here. Yeah, my risk was something like here on this order block. I I waited a few seconds, and I was stopped out on this 10:07, 10:07. But then I was watching this. It was respecting the 1 minute opening range, 1 minute opening range above pre-market high, and we have these nice reactions here. These nice reactions here. Indices were actually looking a bit weaker, but Nvidia was actually holding here. It was holding here. So after these rejections of the or reactions on the 1 minute opening range, I like this candle here, and I enter here 1035. I enter here 1035. So SPY was actually bouncing from the 1 minute opening range, 1035. Yeah, here. So QQQ was at the bottom of this range. So my expectation here was, okay, well, it will go to the high of this range, and this is gonna push at least to something like here, right? Like I was expecting something like this. It was a 1 to 2.7 risk reward ratio trade, but when we cross this point here with this impulsive candle, I just move my targets to 135 right here. And I actually, I had like 25% of my position here on this 134.50, and then I ended cutting like 80% of my position here at the 135, and then I closed my position, I think here like 135.70 or something like that. I mean, on this movement here, I was super exhausted. I was doing something else. It was 11:38 in the morning. So I cut my position there. I had a very nice profit that recovered this small loss. This was a like a 12% loss on my contracts, but okay, well, you tell me. You tell me. So I enter here. I enter here, and most of my most of my position was cut here at the 135. Yeah, right here, 135, and the rest of my position was cut here. It was more than 100% uh, movement here, but the ROI of the whole move was like 60 something percent. So this was a super nice trade for me. And the next thing that I was watching here is this break and retest of this order block on the previous high of the day. So we actually broke here, retested, and we had nice reaction on this order block. And look what was happening on the indices. This was the breakout. Uh, yeah, this was a breakout on both indices. So if you missed these two, well, forget about this one. This was a loss, right? Look, you are the one taking notes. So this was a loss, right? But this one was a super nice trade. It was like more than 1 to 9 risk reward ratio trade. Uh, so I was aiming to 135. So it was a 1 to 5. Let's say it was a 1 to 5 risk reward ratio trade. But this third opportunity here was out of this candle here, this order block created here. Uh, Actually, if you had only your wick, well, let's say also the body of this candle here. So you had this break retest. So if you enter here and you were aiming to 135.50, this was a 1 to 3.4 risk reward ratio trade. So let me go to the chat. Someone took Nvidia. All right. 955, 955, 955. That's also, yeah, that's also a good entry, Ale. I just I just was I just was waiting for the indices to actually go for the 5 minute opening range or the pre-market high. So yeah, I understand your 955. I was just waiting for the indices to pull back a little bit, and I was afraid that it took me way more down on the chart. That's why I didn't take this 955. I waited for this. Yeah, it was 10 a.m. So yeah, that's the reason. And this, what you said, 10:13, 10:13, 10:13. Huh? Well, for being honest, it's just I was about I was just out of that trade and I was looking. I wasn't looking for a video. I have this rule of like stepping away of my desk for a few minutes when I'm taking a loss. Uh, it doesn't matter if it was a mistake or inside of my system. I just try to like reset, and probably I missed this consolidation here. But I mean, yeah, you're right. It's both of indices were retesting this order block here. And the reason I took it here, yeah, well, they went even lower. They went even lower, but QQQ was holding. So yeah, well, I mean, this, this entry, I just miss it. This entry, I just miss it. And this is not retesting here. It was, I mean, it was fortunate, this impulsive move to here. But this is the one actually retesting the level. And on the indices, can you see they were also reacting from that level here? So that's why. I mean, here I was out of my desk after this loss, and here it's not touching the level, so I was waiting, and this is a good reaction here. As you can see, once it touches this key level here, the 1 minute opening range, you have buyers stepping in aggressively. So this is a nice reaction out of this key level here, and also for the indices. So that's why I said like, okay, well, this is a better chance here. So I took this one here, and that's, yeah, yeah, I was lucky. uh, Neto, is your main criteria for entering a trade waiting for the indices to pull back into a key level while a ticker is retesting a key level? Yeah, that's kind of like the fourth step on my playbook. So the first thing is that I need a clear trend or direction on the indices. The second thing is choosing the names that are moving on the same direction. The third thing is the choosing the ones that actually have relative strength or relative weakness. And my fourth entry criteria checklist is looking for a similar move. So like here, I mean, I was waiting for this pullback to this 1 minute opening range, and I was waiting. So my expectation was that the indices were pulling back to here and to here, right? I would like, like it would be nicer a retest of this pre-market high on QQQ. But yes, I mean, because I was expecting a move to the downside to actually retest this key level, I was looking here what was going to happen on a similar key level. So I'm looking for kind of a visual correlation on the key levels between the indices and the tech name. All right, Alex 955. Okay, here, and you took the loss like here on these candles, right? Like these 10 in the morning. Um, wouldn't you say that Nvidia was showing relative weakness today? Uh, well, not necessarily, because as you can see, it actually was looking relative strength, because the indices were slowly grinding to the upside, but Nvidia was having these impulsive candles here. So yes, it slowed down a bit like right here when I entered my trade, but as you can see, it's showing it was holding here even when it was holding here this 1 minute opening range, even when SPY was actually looking weak right here. So because it was bouncing out of this key level and this was holding above this key level, that was kind of my interpretation of relative strength here, right? At the time you entered. Uh, no, I mean, we had this impulsive break of the previous high. I'm sorry, the previous high of the day, 5 minute opening range. So this, as you can see, I mean, it's visually stronger than the indices. And this pullback here, yeah, probably. I mean, it's a little bit sharper than the indices, but because we had this move first. Chris, so if it has an impulsive move upwards showing strength, it's allowed to have an impulsive move downwards as a correction. Yeah, that's actually what happened. I mean, that's kind of the what we were looking here, right? This displacement from the key level, and then this retest of the key level here. So yes, the answer is yes. All right. Well, and we had this third move, third opportunity here. So this was, as we said, this order block here, previous high of the day. Uh, we had nice reaction here. The indices were pushing higher right here. So if you took this trade here, just remember it's never that good to be like here very close to high of the day. You need, yeah, you need some space, you need some room, unless you have a clear target on a different time frame. I mean, like for example here, I mean, if you were like aiming to this or something like this, I mean, this is a 1 to 10, right? But if you say like, okay, well, I'm taking my trade here, this is a 1 to 5 risk reward, right? But I mean, you should be aiming to something like this, something like this. And this is a hell of a risk for Nvidia. I mean, if you trade Nvidia, you know that this is 134.95, and these are like 30 cents on the underlying. Sometimes this is like 20%, right? So if you are willing to risk something like this, you better have a good plan for what you were doing. Well, look at this. I mean, actually, if you were taking your trade here and you were aiming to this 135.50, it was a 1 to 2 reward rate to trade. Well, but I mean, well, this is just a coincidence. But this worked well. The good thing here is that both indices were pushing higher. So this was a nice trade here. Okay, let me go to Tesla. Guys, I didn't see anything on Tesla but for the downside. I only see like these reactions here on previous day close, something like this. I mean, this retest here, weakness here, risk here, looking for the 5 minute opening range. Yeah, this was a 1 to 3 risk reward ratio trade. But Tesla, can you see what happened to Tesla? It's, I mean, it's a wide range. It's a wide range, but it's not showing too many opportunities or nothing that I'm super interested here, especially because it's not looking anything at all like the indices. So this is the first, yeah, look at this. This is the first hour of Tesla. So it's just ranging here. It's just ranging here. And when it finally breaks, there's no one chance to enter here. And it doesn't react to any of our levels. Can you see? So it's not reacting to the 5 minute opening range. It's not reacting to the 1 minute opening range. Yes, it is reacting here to the opening price. But what was happening on the indices? They were actually on the bottom of the range, not looking so good. Yeah, I mean, I would understand if you take something like this, understanding that maybe you made this, yeah, not even this, right? So you had no, yeah, you had no real reaction here on Tesla. So I don't see anything too much of here other than this. Like, I mean, this is a strong rejection of the pre-market high. This is a strong rejection of pre-market high. So you are with lower highs, lower lows, lower highs, lower lows, and in this lower high, I mean, you are looking at this weakness here. The SPY was actually breaking here, is this candle here, can you see? So it's actually breaking this range here. It's a, yeah, can you see? It's kind of a head and shoulders here if you are a pattern trader, and it went down to this 1 minute opening range, and that's the only push that you had. and it went all the way to the previous day low. And if that was your, well, I will say that the real target here was low of the day, and it was a 1 to 3 risk reward ratio trade in a few minutes. Like in 5 minutes, you had this trade here. Next target was previous day low, and again it was like a 10-minute trade. And then after these impulsive candles here, with the indices pushing higher, maybe you cut your position here on these candles here. So you don't wait for the actual break of your stop loss. Once you have, oh well, that's something that I do. Once you start trimming your position, I mean, I try to move my stop loss. I at least to break even or something like that. I mean, once you have something like this, once you have something like this, I mean, you don't wait for your stop loss all the way up. You start moving your stop loss. How much? That's up to you guys. I mean, there's no rule with this. I took Tesla calls 11:31, 11:31, 11:31. From this here, well, you took a loss, right? 11:31. Yeah, because your risk will be something like here, 344.40, and with these candles here, you should be, yeah. Um, Tesla wasn't good today. Took Tesla 1041, 1041, 1041 to the downside, right, Ale? Yeah, for a second loss, lower high on SPY, lower high on SPY. Yeah, can you see here these guys? So Ale took this 1041, expecting this move to the downside. Move 1041. Yeah, yeah. This move was sending lower Tesla. I understand this play, Ale. Yeah, I understand this play. Dian 10% loss. That's nice risk management. Do I just add the tickers when I start the backtesting session? Uh, okay. Bit of topic here, but how would you go about backtesting your strategy on Tricella when it relies so heavily on the indices? You know what? We are having for all of you that are on the Scareface community, we are having this webinar tomorrow about the Tricella backtesting. Well, the use of Tricella. I'm very sure they will show us how to use the reports for understanding our data, and it's expected to have some time about the backtesting. So I will prefer. I don't do the backtesting on Tricella, for being honest. I do it on here on TradingView. So what I do is I open two different charts, and or two different, yeah, like two different windows of the TradingView, and that's the way I start comparing both my tech name and the indices. And usually what I do is I compare against SPY and not QQQ. That's another difference, at least on my back testing. On my daily trades, I have a similar layout like this. I like to see both indices and my tech name, but for the back testing, I use SPY. All right, guys, I'm going straight to Google because I have a phone call with a customer in 5 minutes. It's a customer from my personal business here. So I'm sorry if I need to speed it up a little bit. Who asked for Google? I think it was Eileen, no, yeah, Eileen, can you please take a look to Google for me? I'm trying to understand what I did right and wrong. I marked my previous day high, previous day low, pre-market high, pre-market low, and then watch the 5 minute opening range. And you saw there was a down close candle, 939. Okay, 939, 939, 939 here. Okay, so um, probably you did something like this. This is 939. Yes, 939 here. Oh, 939 here. So you enter here, 943. No, you enter 939. Now I'm confused, Eileen. So you enter 939, calls, and got out 945. Okay. Okay. So you enter here. Okay. You enter here 939. 939. Your risk will be maybe here, and you went out on 945. So this one, well, this is a very nice trade, Eileen. So what you did right, I mean, you are understanding the key levels. This is a key level for me, 165.54. Let me go to Google here. 165.54. That was a pivot level yesterday and several days before. Can you see this 165.54 has been a relevant key level for the past days? So this is something relevant. I mean, you watch this and you understand the relevance of this key level, but I don't like this entry. Why? Because this is an immediate retest. Yes, it's holding here. Yes, it's holding here, but it's an immediate retest. So what I like to see, it's, for example, here I'm like, okay, yeah, like here. So we have the break and retest, but there's a space that there are a few candles away of the key level here. Can you see? Or the next one, it's the break of this previous day high. So you are away of the key level, and then you come and retest here. But there's a visual separation. So that's the only thing that I don't like from here. But if you were positive on this bullish movement, yeah, I mean, yeah, if you were positive on this movement, you can be a little bit more aggressive. It just, this entry is out of my playbook because you don't have any displacement here, But I understand your entry. Let me go to the chat here. How come you mostly use a SPY? Well, it's my feeling, it's my perception that the names that I use the most, Amazon and AMD, they move closer to SPY than to QQQ. You should go to your charts and look for it. Um, okay. All right. Okay. So that's nice conversation. Yeah, that will be easier, Chris and Ale. Uh, if you if also if you can talk about this on the open channel, that will be awesome because this is gold. I mean, this experience share about how to use the trade seller for back testing, that's gold. So if you can do it, that will be awesome. If not, uh, please make a summary and share. But this is the kind of things that is gold for the community because it's peer-to-peer experience share. So that will be awesome. And that way we can also, participate on the conversation. Um, how back long is enough for back testing? Diane, that's a very personal question. How much of data you need to be convinced that your edge work? That's a question for you. And that when you have an answer for that, that's the answer for this particular question. How much data you need to be convinced about your edge, that your edge actually works. So that's the actual answer to your question. All right. So guys, I need to leave you. I'm sorry that today was a little bit shorter than usual. I hope that you find value on this summary of this session. I just don't leave yet. Don't leave yet. Summary of this session. Market market has been moving unusually, right? So we are having the real moves later in the day. We have been having some fake moves, and later in the day they actually work. So I need you to find the sweet spot between adaptability and flexibility. I don't want you to break your rules. Listen to me. I don't want you to break your rules, but you need to be aware how much you can bend them. For example, how much you can wait for a nice reaction, how much, if you can move your trading time, if you can see better reactions on the key level. So please, please, please look at the market and learn from it. Learn from it. Markets are evolving all the time, and you need to be adaptable and you need to be flexible. And I'm not saying that you need to change or switch your strategy. No, you need to know how flexible you could be with your rules, with your entry criteria, with your trade management rules, so you don't break your rules, but you can be flexible with your rules. All right, so that's all for today. Please, please, please like the video, subscribe to the channel. That is helping me to reach more people even outside of our community, and the more people we can help, the more I will be happier. The more happy I am to keep doing this. So guys, thank you very much, and I'll see you tomorrow. Bye.